Also understand that past performance is not indicative of future results. As I mentioned, with Magnificent Seven and Bitcoin, 9 out of 10 investments are expected to generally not do well, maybe fail, maybe do okay. Well, and one is to be a home run, maybe even a super home run. While you look at the real estate, the general expectation, majority of these deep value deals will do well. So 9 out of 10, maybe 8 out of 10, but a wide majority is expected to do well. So what are the targets and projections typically in these deals? It's you go 2x or 3x your money in 5 years. So the same methodology that we just discussed, where you write a check of $1 million into 10 projects in real estate. And what is the expectation? Is, let's call them 9 out of 10, double or triple your money. 2.5x is definitely a very realistic target, maybe even 3x in some circumstances. So you can wind up doubling your money on 90% of your investment and losing one investment, or the other investment just doesn't do great. It breaks even, maybe makes a small profit. So mathematically, the target return in real estate, maybe 18-20% as an example in deep value buys. You get the cash flow on the way of, let's say, 6 to 8%. And there are significant tax benefits. Simply speaking, big beautiful bill, restored and made permanent, 100% bonus depreciation, which effectively creates massive incentives from a tax perspective. So folks can write a check, get huge tax benefits up front through the bonus depreciation, enjoy years of cash flow with effectively no tax liabilities because of the depreciation, get deductions if they can use losses driven by the bonus depreciation, and also make strong returns with projected 5 years time horizon. So it's a boring investment, but it's a more conservative investment. It's a more predictable investment. It is a better investment, one of the most important benefits of commercial real estate. It's a great investment on a risk-adjusted basis. In my view, it's a certainty play. It's a higher certainty play versus the investments in Bitcoin or Magnificent Seven. Now, some people may love those investments, and I have nothing against those investments. In fact, most investors should have a little bit of each. Some aggressive investments, growth-oriented investments, where they can hit a home run, a super home run, but also most folks should have a safety base, a margin of safety. Let's just call them their moat, their conservative part of their portfolio. And commercial real estate investments today could be that. So this is the compare and contrast analysis, and there's no right or wrong. It's quite often all of the above. But what's important is for folks to understand each, and also understand that past performance is not indicative of future results. It's one of the most important concepts. So the past bull market great returns of Mag 7 and Bitcoin doesn't guarantee or doesn't even indicate or predict that they're going to continue to do what they've done in the past.